Welcome to our deep dive analysis. This video is thoroughly researched and compiled by Harsh Oberoi, an experienced financial analyst and a seasoned observer of the Indian stock market. Harsh has spent years studying the intricate dynamics of this market, and he brings his expertise to bear in this video. The purpose of this analysis is to shed light on the widespread overvaluation currently seen in the Indian stock market, based on a comprehensive examination by Kotak Institutional Equities. We will dissect the reasons behind this overvaluation, discuss its implications, and explore the potential risks and opportunities it presents to investors. Remember, understanding the market is the first step to making informed investment decisions. So without further ado, let's dive into the overvaluation of Indian stocks. Scene 2. Are overvaluations plaguing the Indian stock market? This query isn't just speculative, it's the current situation. As per a study conducted by Kotak Institutional Equities, excluding financials, overvaluation is the norm in the majority of Indian sectors, and this overvaluation draws its foundation from historical data and the market's optimistic yet potentially unsustainable assumptions of short-term profitability. India's large-cap consumption stocks are especially bearing the brunt of high valuations. Nevertheless, this doesn't imply that all large-cap stocks have inflated price tags. Although a majority of large caps have reasonable valuations, a handful of subpar companies are trading at exorbitant prices. The Nifty 50 is currently trading at 20 times the projected earnings per share for fiscal year 25, while Kotak's analysis indicates that some mid-caps have a forward price to earnings ratio swinging between 30 to 60 times. In this sea of overvaluations, the financial sector stands as an oasis of reasonability, with most stocks trading at reasonable valuations. But why this widespread overvaluation? According to Kotak, the street's euphoria is to blame. This euphoria has led to a dangerous obsession with superficial narratives at the expense of fundamentals and numbers. However, this large disconnect between elevated prices and fundamental values may continue until some global or domestic event triggers a risk-off sentiment. Currently, there's nothing negative on the horizon that could potentially lead to such a sentiment. In summary, the Indian stock market is currently experiencing widespread overvaluation, driven mainly by the street's high profitability assumptions and a dangerous obsession with superficial narratives. This overvaluation is most pronounced in large-cap consumption stocks and several low-quality companies, with the financial sector being the only area where most stocks are trading at reasonable valuations. This situation might persist until a significant event shifts the market sentiment towards risk-off. But as of now, no such event is in sight. So for the time being, the overvaluation of Indian stocks remains a reality we must grapple with.